All right, hello everyone. I'm back in action, as you know, from the beginning of September. So I thought I'd do a recap video because I'm not doing any videos or loading up anything because I think I've pretty much done everything I wanted to do in terms of videos and explaining time and price. So we'll just do a recap every now and then and see how things pan out. So I'm just gonna minimize myself, put myself in the corner here. This is gold. Let's take a look. Now, as you know, on the 24th of August, I already outlined and gave all of the dates for September, okay, until the 5th of October. So that first week of October is pretty much already done as well. It's already in there. So all you have to do is also, check next week from today. You can if you like. All right, so we've got the swing days: Monday, Wednesday, Friday for gold, euro, dollar, Monday or Tuesday and Friday, and you got Monday or Tuesday and Saturday for Bitcoin, etc., etc., etc. Okay, and these are the trade hours which I posted at the end of August, and the videos I do daily, as you know. On Friday I didn't do a video because I normally work Monday to Thursday, and sometimes though I will do a video on Friday if I'm in and if I don't have much on, and so on. But at the end of the day, this is how it is. So if we take a look, let's go into Monday first, right? Let's take it from Monday. Now with gold, I'm going to take a look at gold, and then we can look at other stuff as well. If you want anything specific to look at, you can also drop a comment, okay? So this, as you know, is how our swing days are looking like. Now Monday turned into a breakout day. I did say this is a resistance zone, but as you know, we are bullish. I'm definitely bullish on gold since the price of 1,600, believe it or not. If you've known me, because some of you know me for like several years, you know that I've been long on gold since all the way down here, okay? In fact, lower, when the price was around 1,600s, yes, around here. And I was always saying gold, we need to be going up on gold, okay? So ever since those levels, I'm like pretty bullish on gold, and every time the market comes down, I am in favor of buying gold. And the good thing is that if you know the swing days, you can get in at those right swing days. Now a swing day can also be a breakout day, okay? So here it turned out to be a breakout day, and knowing Wednesday as well, let's do this, this is Monday, all right, and knowing Wednesday is also swing day is important. Why? Because it gets to a target. Okay, when it gets to a target, then you see the market pulled back on Thursday, giving us another possibility to go in. And I did say in the videos that what the market can do is either from here go into Friday, or we can like muck around here as well in the highs. Okay, because we are bullish on gold, not just us, but a lot of people in the world are bullish on gold. So we could also keep our head up. And also non-farm payroll was coming up on Friday, so we need to be careful. But let's take a look at the hours for the whole week, right? And let's see how we did. Now the vertical lines, as you know, are the hours. So what we want to look out for is, if you know direction, if you know what you're going to do, if you're a buyer or a seller, what you want to be doing is matching your time and price. Okay, so if I do, this is Monday, as you can see. Can you see here? You can't see here, but this is Monday. All right, maybe if I did this, so if I did, oops, there you go. So that's your Monday, as you can see there, right? So Monday, Tuesday, here we are. So Monday market chucking a UE, going up, and we're pretty much stable. Okay, Tuesday from the upside, sizzling down from the upside, sizzling down into the next trading hours, and then it's a big push into that closing zone on a Tuesday. Wednesday, it's been all sideways until we got to New York. But Wednesday is also, as you can see, for anybody who's bullish, okay, it's to the upside. Now on Wednesday, it was a swing day. So I said swing can also come at the end of the day for Wednesday, because we had that 3,569 price target. So that was the price target, and we want to be matching prices. Remember, it's not just timing. A lot of people misunderstand because they go, oh, I'm going to get in at this hour. You have to have a price, a technical analysis price, plus a time. This is why I got the PST. You see, on the daily, oh, come on, Where are you? PST, here we are. On the daily, for example, this is going to give us targets and pricing as well. For example, look, if you were following the market on Thursday, this blue line was your support level right here. You would have had a price for this one. Because this is the daily, this will change every day. Okay, it's not repainting. Every time there's a new setup, you're going to see where the support resistance is, and that is the resistance. Now, this red line occurred on Friday. It wasn't like this on Thursday. On Thursday, it was a different ballgame. So on Friday, at midnight, when the market opens at 1 a.m. my time, actually, the market was looking like this. Now then it goes into 77. Now that 77 is a PST price, which you can see up here, is 3,595, 3,605. So that is a target zone where the market should reach. 3595, let's take a look. 3595, 3605, there you go. Nice and easy. Okay, pushing into there. Now if you take a look at Wednesday was also a swing day. Market goes up. Why into 3569? Because 3569 is 7071, 7072 actually, is 3,569, 3,618. So those two levels were also price levels where the market could turn around at. And this is what happened. Slightly out above that line. Now, the only thing we had here time-wise, I had here was this. All right. So at the end of the day, you know, this was the time, this was the price. So if you sold around here, you would have been pretty much okay. But if your stop loss was really tight, because I keep tight stop losses, you might have been stopped out. But at the end of the day, the market did turn around. Obviously, this was not a good place to be buying. So if you're bullish, knowing when you don't want to be buying in terms of price and time is important. Market comes down on a Thursday into trading hours. Look what happens here. It does a stop sweep. I talked about this as well. This was also a price level. On Thursday, 3,518 was that Thursday level. Okay, you can watch the videos on Vimeo. I'll actually make it available for everyone today. And then you can go and take a look at them. That's Thursday. So the market does a quick stop sweep, starts pushing to the upside. Now look, another nice thing here. This is the opening price. When you got an opening price and the market's got a trading hour as well, obviously, you know, buying here is a bit tricky. What you want to do is buy at the lower end, and you know, be careful if you're buying at the higher end, because you don't want to be really doing that unless there's a breakout pullback. So the market buys here on a Thursday. Friday, we're waiting for the non-farm payroll news, and this is Friday. Okay, and the market goes all the way from here there. Now on Friday, I did make a comment about this. You'll have comments on a lot of stuff. You see, I make comments here as well. And on Friday, I did pretty much the same as well. Right? Here's the price comment. So that's 1251.20. Now this is pretty much London session. I said which may be a good zone to turn. If it turns, it should go to New York gently if it keeps pushing target closing. So this is London session, going gently into New York, pushing into the targets, and that's your closing there. All right, so by that time you would have been pretty much in your target anyway. You would have either taken profit or pushed your stop, you know, up there. But this is pretty much how it is with everything. Let's take a look at euro dollar and check euro dollar. Let's take a look now with the euro dollar. The swing day, as you can see, is Monday or Tuesday and Friday. Now Monday, Tuesday and Friday, what a beauty. Now I did talk about this and I said, what a beauty. Absolutely. Why? Because Monday, Tuesday, we made a top, and Tuesday market sold. I said we need to be careful into this, you know, this rectangle here. Okay. And I did say if we're in here on a Friday, you know, because of swing day, we can buy to the upside. And that's exactly what the market did. Let's get rid of that. Okay. So market doing a beautiful move to the upside. Now the important thing is, right, how was our hours? You know, did the hours also match? So let's take a look. Monday, Tuesday, right? Let's see. This is Tuesday, that's Monday. Okay, so Monday London session, as you can see, it's making a high at the trading hour and then sizzling down into New York. Then Tuesday, Monday or Tuesday, remember, Asia is bringing it down. This is London, slight buy, but we're not going above the open. And then boom, right in there. And then as you can see, we've sizzled all the way into that green box. Now these were PST levels, I'm guessing, okay, because I have PST levels, as you can see here. So this blue line actually happened after that bar closed, but before that it was, because it's constantly updating itself, right, we would have had like this, so that would have been a buy, or we would have had, whoops, not you, let's get you out. Okay, so we would have had a blue line like this, okay, and the market would have been like, you know, on it or pretty close to it, and then we would have had a price for it, basically. That's what I'm trying to say. And once that price is done, we should have been okay. So as well, on Friday, so Monday, Tuesday, from the highs, the market comes down into that green rectangle, which we determined as a target zone and a reversal if we could get in there on Friday. And that's exactly what happened. So knowing the swing day is great because you don't have to rush the trade. You know your price zone. And on Friday, let's take a look again at those hours. You can see on a Friday we had in London 12:51:20, 12:50, 12:50 is, that's your 12:50 there, and then 1:20 is there. Okay, so this is a bit tricky, okay, because the market's already taken off. At 6 to 6:30, where were we? This is 6 to 6:30 is there. So this was the previous hour. So market basically just pushing to the upside, but with New York, as you can see, a big push. Now with this as well, we would have had a target. Look, on Friday, your daily target was 57 on the PST, which is 1736. That's where you would have taken profit, because you know if it hits a PST, we want to take profit or want to make sure we're on top of our game. 1736 is there. And on the weekly, oh, we've closed right under that line. It's a little tricky, eh? But this was it. Pretty much we are bullish on this. I did say this is the impulse. We've got an A, B, C consolidation happening here. So going long is really logical, okay, on the euro dollar, and this was a nice zone. I did say before, and I still want to see the euro dollar come down into this zone before any heavy buying, but it's still, if you got a swing day, swing hour pricing, why not just do it? Okay, and that's how it is. So if you just match it, you should be fine. As you know, we had non-farm payroll coming in, and that was at what, 3:30. That's there. Okay, so once the market, as you can see, is kind of breaking to the upside, it's bullish here. It's just a matter of waiting. You can also box your trade if your broker allows you to do boxing, which is when you got a trading hour, you pick a high, you pick a low, okay, like a cause consequence kind of thing. So from there to there, let's say, okay. And as you can see here, there are stop sweeps, but there's no real break until that bar, and that is before the news. So the market goes up before the news, closes above that zone, so it's telling you we're bullish, and then that's it, and the news comes out, boom. Okay, so I've made a video on boxing as well, how to box time and then move along with it. Let's take a look at SP 500. Now with the SP 500, as you know, we had Wednesday, Thursday. Let's check it out. Here we are, Wednesday or Thursday. Now also make note here, we've got Tuesday or Wednesday for NASDAQ and a Friday. Dow Jones Tuesday and Thursday. So we have to make sure, if there are common days on this one. For example, Wednesday is a common day for SP 500 and Nasdaq. Tuesday is a common day for Nasdaq and Dow Jones. Thursday, Dow Jones, SP 500. So we've got to keep an eye out for those days. Now, let's get rid of this. SP 500, Wednesday, Thursday. Market comes down Wednesday and Thursday, as you can see. Why? Because the market came down. All right, market comes down Wednesday, Thursday, push up. If we were up, I would be on the bearish side. If the market is up, we want to be bearish. If the market is down, we want to be bullish. Okay, but sometimes you just have to be careful, because sometimes we're in between levels, right? When you're in between levels, it's just tricky. So then you have to wait for a breakout to either the upside or the downside. But if there's an impulse wave to the down, obviously you want to play it to the down. If there's an impulse wave to the up, you want to follow it to the upside. Now, as you can see here again, on the daily, it's done a price of 63, which is 6519. Let's get rid of that. 6519 is pretty much there. Okay, as you can see, 6519. Market touches New York, and then boom. All right, comes crashing down. So these are why it's important to have your pricing. Okay, and also if you bought Wednesday, Thursday to the upside, you should have been okay. And Friday was a swing day, so also look at that. This is the weekly chart. That's an LCL1 line. It's giving me a price of 6545, and let's see, 45 is there. So that was your zone. Okay, in between that zone was your sell-off. Now, in New York, I didn't have an hour for this on Friday. All right, as you can see, I had the London. Okay, and this was the London, and that's your New York push up. Okay, and it's actually a whipsaw, so it would have taken a few people out of the game. But there you go. PST levels here. You don't want to be a buyer. If you want to buy something, you got to buy it cheap, not at the top here, because the market's already gone up, and there are gaps down here as well. So it's just poof down. Once it finds direction, coming all the way into targets and previous days lows. Let's take a look at Nasdaq. Well, let's take a look at Dow Jones first. With the Dow, Tuesday, Thursday. Let's see. The beautiful thing about the swing days and the hours is, if it doesn't match, you just don't go in. Now this is Tuesday, market's down, that's your Thursday, market's going up. So if you're following it nicely, that's your Thursday, market going up. You see how, again, it's bouncing off that green rectangle, just like with the euro dollar I've done. So Thursday going in there. Once again, look where they're selling on a Friday. That's a price of 63 on the PST, which corresponds to 45,776. 45,776 is there. Oh, pretty much right on the dot, guys. There. The highest it did was 773.70, and then boom. All right, straight down from there. Okay, so the time didn't really match, but the hours did. As you can see from London, London was a seller Remember, it was 1230, 120. Okay, market selling down. Now, what does New York do? It gets everybody into the market, sells quickly. Now everybody's trapped. They've just trapped all the buyers. And that's why, if you know that Friday is a sensitive day, why? Because of NASDAQ Friday. Okay, then you can see why you shouldn't be buying highs. Okay, and that's your Friday, that's your Tuesday down, Thursday up. Let's take a look. NASDAQ Tuesday or Wednesday, and we got Friday. If I take a look at NASDAQ, Tuesday, Wednesday. All right, Tuesday or Wednesday. This is good. This, I said from the lows, it can be bought nice and easy. And I did say this flag formation can break. So they've like really brought it down, stop sweeped, and then pulled up. So going up, yes, into Friday. All right, as you can see, Friday they stop sweeped as well. Now this is above here. We'll have to see how Monday the market will open up. Okay, this should probably be the same kind of setup. And on the weekly as well, look, the support and the resistance. You see how important it is to know these pricings. 67 is 23,761. So 23,761 here. You see that's from the weekly. On the daily, we don't have anything. But having that on the weekly is already like, well, if I'm a buyer, that's where I want to go to. And if I want to buy the lows, 60.17 or 60.18, 23,089. So 23,089 is there, as you can see, and buying that there at the trade hour. Okay, so that's a PST level at a trade hour, as you can see. That's Friday, Thursday, Wednesday, Tuesday, and Tuesday was a swing day. NASDAQ, Tuesday or Wednesday. All right. So on Tuesday, we were at a PST level at the trade hour. Bingo. Let's take a look at Bitcoin. What did I give for Bitcoin? Monday or Tuesday and Saturday. All right. So Monday or Tuesday and Saturday. Let's take a look. Monday, Tuesday. All right, so Monday or Tuesday. Oh, Friday, look, in the green box. So if you targeted that, you would have been fine. Saturday, if we dip up there, I mean, Saturday selling is like looking okay. But this is a classic. Okay, so as you can see, Friday, okay, Thursday, Wednesday, Tuesday, Monday. So Monday, Tuesday going to the upside. And remember, we had pricing for that. I did talk about that HCL1 line, the red thin line, 112,234 up there. So the market did that. Actually, it did that like on Wednesday. So this was like a target zone. If you wanted to sell, it was a sell zone as well, which I talked about it. And then if you sold on a Tuesday down, you should have been okay. And on Friday, if you sold on, Wednesday, right, because Tuesday, Wednesday, making targets, turn around, comes down into Thursday, sells off again on a Friday. So no dramas there, no loss of love. And there we are. But we are bearish on Bitcoin, so I am expecting this zone to break down. Okay, as you can see, a lot of buyers came in, but there's selling pressure there as well, and the market's tapped into that part before, and it's not very buyer enthusiastic zone. We should be coming into 99,225. That white line is a target for this move. Okay, So Saturday, if we're up somewhere, we should be like wanting to sell. I don't have the trading hours for Saturday because I'm doing those trading hours manually, and it's a bit of work. So yeah, it's a bit of detailed work to do these, and then to also, see if there's something that's going to happen, so I can like comment on it as well. All right, so let's do this, and that's basically how it is. Are the hours working good for Bitcoin? Well, we can check it out. If I was to take, well, let's do Monday. Let's do the hours for, let's say these hours for Bitcoin Monday. Let's see. Got 5:11:45. This is Monday, right? That's your 5 o'clock. That's your 11:45 here, London. Then you got 1:55, 3:10. That's your 1:55 is there actually. And then you got 10 past 3. 10 past 3 is there. And then you got 4:50. Got 4:50 is on that bar. And then here the market's just sizzling down. Well, London sold off. So New York is selling on the retracement after closing the gap. All right, and coming down into again that targeting PST levels. On Tuesday, that's your trade. That's a PST hour there. Sorry, a trading hour there. Let's see what else do we have on a Tuesday. Opening can be good. And then we've got what? Expect volatility as we get towards 1 to 1:30. So we've got those hours. Let's see 1 to 1:30, because that's the time of being awake. 1. This is your 1 to 1:30, market taking a dive. That's your next hour at 3:30, is it? Yes, between 3:20 to 3:40. So expect volatility as we get towards 1 to 1:30. If there's news, setup is 3:20, 3:40. Now, I've said here if there is news. I haven't checked if there is news or not, but if the setup is 3:20, 3:40, and that's your 3:20, 3:40 happening here. So the next bar, as you can see, is just shooting to the upside. If it finds direction, you can target 10:15, 11:40, which is pretty much closing. 11:40 is there. All right, so it's pretty much done, but we would have targets, right? I'm not going to say you can target closing and not have a target, price target. Even if I don't say there, even if I don't give a target, you should always have a target, because if you don't have a target, how are you going to calculate your risk returns and stuff, right? So make sure you're always calculating those. Wednesday, let's take a look. Volatility expected today. So what have I got here? London is at 11:30. Pre-trading New York starts around 2:22:45. That's on a Wednesday, which is there. $11:30 is there. What else did we have? 2:22:45. 2:45 is there. Yeah, nothing really happening here. So this day would have been a bit tricky, because the market's going sideways. 3:50. As we get to 6:15, we might have a disruptive move. 6:15. That's your 6:15. So as we get to 6:15, that's your disruptive move, as you can see. So knowing these things actually is like helpful, because you can expect things to happen, and if you expect things to happen before they happen, then you can manage your trade better. You can take profit, or you can say, you know what, if I am expecting a disruptive move, maybe I'll just put the stop loss a little bit higher and not, risk it, and so on. And then this is 6:15. As you can see, the market from these highs just sizzles down into Thursday. What have I got? 7:20. From here it might go one directional all the way to New York. So 7:20, 4:15, 4:55. 7:20 is there, and that is going all the way one directional into 4:55. 4:55 is pretty much there, going in that direction. Did I give an evening figure for that? 5:40 on a Thursday. 5:40. 5:40 is on that bar. So market starts selling off. London continues, so we're going all the way down. Okay. And Friday, we talked about Friday. 6 to 6:35, 12:50, 120, 6:30 there. So 6 to 6:30, and then what was it? I forget. 12:50, 120, and this is 120 there. Which may be a good zone to turn. If it turns, it should go to New York gently. If it keeps pushing, target is closing. So we went up into New York gently. It didn't keep pushing, it just boom, reversed. So if you went long here, it was enough to cover the trade and manage the trade, but it wasn't enough to take really a chunk in the market. But with Bitcoin, I gave you this target like pretty much maybe last week, or like maybe a few weeks ago, when we had this breakdown, remember? Okay, so the market broke down, so we are bearish. So obviously when you're bearish, the buying is going to be a bit more tricky from the highs and stuff. You can't buy from the highs, you got to wait for the pullback to buy. If you're bearish, but if you're bearish, buying is tricky because there's selling pressure. Okay, and if you're bullish, selling is tricky because the market is bullish. Like gold is bullish, so selling gold is tricky. Rather, on swing days, you want to look for a decent low price to get in. Okay, obviously if the price is high on a swing day already, then you don't want to be buying market tops. You just got to sit and wait for that pullback to happen. And like with the euro dollar, right, we had a Monday, Tuesday high, so the market sold off. Friday was a swing day, and Friday was low, and it was in that rectangle, the green rectangle, where price was price time. The swing day is okay, so pushing it to the upside was okay. So you just have to make those calculations, and life will be a bit more easier. And also at what hours to trade, what days to trade, or what days to look out for. Sometimes, for example, market will make a high on a swing day, and then you think to yourself, well, why don't I just trade this tomorrow? Let it go, trade it tomorrow. And then the market comes in and there's a trade hour from the highs. You can just sizzle it down nice and easy. If you're going short, or if you're buying, you do the opposite. You can wait for the next day as well. If there's an impulse wave, like from the lows, let's say they bought, then even though it's not a swing day, you can wait for a pullback on a, let's say Tuesday and Wednesday, or Wednesday or Thursday. You can wait for a pullback, and then if Friday is a swing day again, then you've come back, and then you can use Friday. And even if it's not a swing day, after the impulse wave, if you pulled back into like 37.5, 25% on the retracement, then if it matches a trading hour, go for it. Those trades are always good winners. More often than not, you get really, really good risk return and very high probability of success. Okay, have a great week ahead and a good weekend.